morning, good afternoon, good evening. No clue what time you're watching this, but I'm going to get right to the point because it is 5 a.m. over here Monday morning where I'm at, 5 p.m. over there on the East Coast. And futures are about to open up in an hour, and as you can see, weekend Wall Street, which is not 100% accurate, but it's pretty damn good, is already showing that the Dow Jones is off the pre-weekend, pre-start to the week highs, where it was predicting that we would be jumping up greater than plus 1% on the bullshit stock pump and dump of Donald Trump, verbatim repeat of POTUS 45, back when he was president before, where he is pumping that a China trade deal has been done, which coincidentally, as you see, not that it's any kind of a secret, but India and Pakistan have stopped their incredible war where I believe it was 14 Pakistani soldiers were injured. Ceasefire agreement over in Russia and Ukraine is on the table, ready to take place. Again, it's a video game, and I warn you, just as Frank Lopez did, if you want to fall victim to following headlines.
Hey, Tony. Remember I told you when you started, the guys who last in this business are the guys who fly straight, low-key, quiet. They're the guys who want it all. Chicas, champagne, flash. They don't last.
You finished? Can I go now?
And the reason I share that is because we trade the data, we trade the charts, and just to go over this, because the Pope dying right after Good Friday was a pretty goddamn good thing. As you can see here on the spreads, which is where I'm starting this off with here, find me a loss. Find me one. Go back through it all. Go through everything. Find it. Your 150% there on Friday was just to cap off a week, which was pretty damn simple. And what I have for you over here in red is the April 30th, and I'm going to pull that up. The April 30th red month, when I was calling for a green month. And me calling for a green month started back in March of 20... Oh, I don't even have this ready yet, so I apologize. Oh, yeah, I do. Here we go. Save. It is saved. I saved it as a different name. That's why. I started calling for the green month of April back in the middle of March. And instead of getting the green month of April, we closed red, having missed a green month of April by just 16 points on the final day of April, April 30th. However, because of the incredible volatility and dips that we had, knowing that April 30th was still going to be April 30th, your 50-90, 50-95 put credit spread was full credit. Your 51-10, 51-15 put credit spread was full credit. Your 53-95, 5400, don't need to repeat myself, the 55.25, 55.30s, and then the $4.50 credit, 55.95, 5600 puts for the green month of April. They were at $3 prior to the open on Wednesday, and during the course of the day there on that Wednesday, April 30th, we wound up just 16 points shy of a green month. I stick here with the spreadsheets, a little bit advanced or adjusted here on the bottom so that you can see a little bit more data. And again, market closed on Good Friday, and the Pope being dead the day or the week after that. Here we go. Green, and last week by 4.59 points, another green week. 3 green weeks in a row, which we are going to go over because we have the same thing over here on the QQQ. green, 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 green. 3 points last week, and where are you? 492.70, 491.54, 490.91. Remember your highs back in March up there, 493.62? Yeah, well, you better pay attention to that because that's one thing we're going to be covering here. Same thing over here on the SPX. Again, the March 13th low, 54.88.73. What's the significance of it? We'll get into that in a little bit as well. And your March high, 57.86.95. 2 points of significance on that, which we will be discussing as we are here. 56.59, just shy of about 100 points from getting up to that. And I think we've kind of already covered in the email there on Friday, which you can go through on your own. OPEX next week, Friday, May 9th watch, and the absolutely dumbified down, easy to follow as of why we are where we are and the significance about where we are and what we're looking forward to. So I bring you over to the IWM before we get off these spreadsheets because they're a little bit boring. And we have here your tick, tick, tick. Green week, green week, green week. And where are we headed to? We are headed into what has already taken place, which was the full moon. Full moon over here, May 13th, happening here on Tuesday. Thought it was yesterday because gorgeous full moon that I was looking at last night. Full moon happening here on Tuesday, May 13th. And May 13th, you are getting your CPI report on May 13th. You're getting over here the month-to-month CPI report, which, as you can see here over the last 2 months, has been beating the forecast, has been better than expected. Doesn't make a difference because charts are charts. And just to go over where we are with CPI, which anybody can also track this. Again, April 10th, you got to go and look where you are on your charts. This has nothing to do with the CPI report whatsoever, but here is your big gap down, your huge, enormous range, and one of your biggest closes to the downside in the last 5 years, if not greater than that. April 10th, big down day, although CPI was better than expected. March 12th, same thing, better than expected, and the reason being is because we were already in the beginning of that downturn, and March 12th is the day before March 13th, where we bottomed. 52-point range, 103-point range, go through your ranges. All that we're looking at here is data, and as you can see here, where CPI used to be very predictable, it no longer is as reliable as it used to be because we are in a different part of the algorithm. And as you can see here on your SPX, how you've reached up to 5,700 on May 2, you reached up to 5720 on May 8th, Thursday, which changes the data as far as the charts go. This week, quickly, earnings. None of this is of any significance as far as my point of view. Anybody who wants to trade any one of these names, you let me know, because I've got virtually every one of these already charted. You ask me about it, I pull up my chart, maybe have to update it, which takes me about 35 seconds, and I can give you a pretty good idea, which is very similar to a message that I got during the course of the week. Somebody asked me about booking. Took me 30 seconds to pull up booking and say short 52.50. Just happened to be at 52.50 was your high, and you wound up closing at 50.71.96. So that individual member who asked me about it made a significant amount of profit. Percentage-wise, dollar-wise, I have no idea what size the trade was. But again, any of these names that you want, feel free to ask. I am happy to share. Where are we else? Again, sharing you this big wide view about, you are here, you are here. Do what you want with it. And again, having shared that from the beginning of the month, how we had 3 red months in a row. However, your 2 months, that being February and that being April, were not even 0.5% to the downside. Neither one of them. So there's a lot to be measured when it comes to 3 red months in a row, but it is still 3 red months in a row. So that's where it comes down to. And again, calling April to be a green month, you missed it. Didn't work. Well, guess what? Made a shit ton of money on that one. So again, on your following over here of the Donald Trump bullshit, that do what you want. it really doesn't matter to me, but I don't have this updated, which I'll get into in a minute. Um, we have Jerome Powell speaking on Thursday. It's of absolutely no significance. He's at some kind of a meeting. He'll more than likely make a nonchalant comment to say the exact same thing he said there the other week, and it won't make any difference whatsoever because this is OPEX. OPEX week is created in order to destroy all of the small retail traders that are expecting things to keep moving the way that they have been. And as you can see here on the IWM with 200 closes, 3 closes up in the 200s, we still have not made the 50 retracement on that drop that took place. So anyway, boring enough to be going over the simplified data, which is just too easy to be able to see. So I bring you here onto the SPX looking at a weekly chart, a weekly count chart. I'm looking at the weeks. How many weeks do we have? What do we got going on here with the weeks? Well, here we go. We have 3 green weeks in a row. And like I've shared dozens and dozens of times in the past when we have been going into this view and into this count, getting 4, getting 5, getting 6, getting 9. It's not illegal. It's just that you have a significant warning. Hey, you better be a little bit careful because you've already got 3 green weeks in a row, and during the 40 plus times that you have had 3 green weeks in a row going back to, I don't even remember the date, it might have been COVID, almost 35% of them or 40% of them go for a 4th green week. And again, put it into context, you came off of a massive sell down there on COVID going into the final 5th ending of the end, which as a little bit of a, hello, Warren Buffett just walked away. Sem Karsan talks a lot about that in his recent podcast, which I'll share in the email. And I may, you want to listen to it, you don't want to listen to it, it's up to you. But here, we have a bit of significance coming up here, and I will change the view on this chart just so you can have a better idea here. Again, we have 3 green weeks in a row going into where we are. The 200-day moving average we have continued to discuss, which is up here at 57.48 and moving to the upside still. The 100-day moving average, which we have not discussed, is slightly above that. But more importantly, the Donald Trump stock market. Donald Trump's stock market is at 57.83, which is why we talk about that March high back there on March 25, 57.87. And just go over here and look at where your lows were when we sold off back on January 13th. Oh, here comes the major sell-off, and we sold off right to the Donald Trump stock market. So Donald Trump stock market's 57.83. Everything below it, that's Joe Biden's stock market. But everything above it, that's Donald Trump stock market. So 57.83 you're going to want to know about. You're going to want to actually be directly involved with watching. And here we go. What I have for you here is the chart going back to March 25th. And the reason I have the chart going back to March 25th is, as I shared there on the spreadsheet, to see where the March 25 high is, that being 57.8695, right where the Donald Trump stock market is. We have our 200-day and our 50-day that are still expanding, 50-day moving lower, 200-day fractionally moving higher, and here we are into this glorified 1, 2, 3, trying to make this as bullish as we possibly can. So let's zoom you in here on the 3 weeks that are up. Hang on. So with the 3 weeks here that we have that are moving up, very clean, coming off that 5101.63, boom, 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 boom. We can look at this in a number of different ways. All of them come to the same conclusion, that we are in a very clean topping pattern, fractionally higher high, very possible. And after that, we are due to get a little bit of a dip because, again, we have not had a dip. Come back again. Let's go into our spreadsheets because this is what we have been talking about for the better part of a month already, is that we are looking for that May 19th, somewhere in that May 19th, plus or minus, to produce us a significant high. The reason being is because of the Fibonacci spiral, which giving a lot of respect to, and you can go out there and you can look at the Fibonacci sequence and research it all you want, since that's what you trade off of anyways. Fibonacci extensions, Fibonacci retracements. The Elliott wave is 99% based on that, and you can see here the Fibonacci numbers were first described in Indian mathematics as early as 200 BC. So go get yourself a nice Vindaloo, sit down, start understanding how Fibonacci's work. But what we're looking for still is that slight move to the upside, which we're looking at a very tight upside availability. The upside availability above that 200-day moving average, which coincidentally, 56.59, I don't need to be a rocket scientist, but a plus 1% move would bring us up here into around that 57.10, 57.20 area where we just visited there on buy stocks from Donald Trump the other day. And we would be coming into that range, which, as you know already, when you look back over here to April 30th and how the month of May began, we gapped above that 50-day moving average. So we're still in the same place. There's nothing changed whatsoever as far as minimal upside, still looking for that dip to come, and then we can start making adjustments to see where we are. Here we are on the last 5 days. Like I've shared with you, you're visiting 56.45, 56.35 every single day. Here you are on Monday, above it. Here you are on Tuesday, below it. Wednesday, below it. Buy stocks. Here you are, FOMC day over here on Wednesday. Here you are on Thursday with the gap up above, and then Donald Trump's buy stocks. And where did you close? Right under 56.65. And here we are on Friday, where on Friday, this is again where you need to actually make a judgment call on your own. Friday, all you did was burn your eyeballs. Simple as that. Told you, here's your risk. $3 trade, red close. You put it on and you walked away, and you came back at the end of the day and you said, look at that. I made 150% and I never had to watch the stock market all day long. So I bring you over here to the new moon, and I left this here as it was because I now can place, not that, this one here. I now can place this as being the new moon bottom, having confirmed it because we broke up above that 5,700, putting that 57.20 on Donald Trump's buy stocks.
It will be not a game changer, because that's not a nice enough term. It will be wonderful. It'll be so beautiful. It'll be a gift from heaven if it works.
Took out that high, so that high is no longer there. We have put in a new high, which means that I can now go ahead and make this permanent, that was the bottom over there on the new moon. What's the significance? Well, I'll show you what the significance is, because we're going into the full moon, which is opening the window up now. And I can already go over here and I'll put this in white with a lot of confidence. We're putting our high. That's what we're doing. We're putting in our high. Full moon window is already open. It will be closing, when is it? Was I right on that? Yeah, I thought it was the 13th. But anyway, here we are going into the full moon. CPI going to be here on Wednesday. I am looking for the full moon top to be placed somewhere in the range of that 57.40, 57.50, which I've already talked about. And then we will see what we get coming after that. Go over here onto our QQQ, looking at the last 15 days. Same thing. Your big bright red, that's your gaps. You don't have any gaps that are up above. And when you talk about up above, yeah, there's a gap up here from back in the very beginning of March, up in the 502, 498 area. You're going to need a lot of juice to come out for that. And you don't have NVIDIA reporting earnings until next week. But again, I wouldn't say that it's off the table, but you're still looking at that 494 area. And that 494, you're already going to see it here on Monday. So again, it's the bullish failure more so than it is the let's go Bears, let's get loaded. It's got nothing to do. The two are completely separate. If I want to bet that you can't do 25 push-ups, knowing that you can do 20, that's me betting that you are looking at a bullish failure. Now, me betting that you can't do any push-ups when I know that you can do 10, that's just fucking stupid. That's being a little bit too bearish, and that is making a huge mistake. So, with this being OPEX week,
don't fuck it up.
That's right. Don't do it. So again, here on the QQQ, looking at it from the wide point of view with 493.62 being your March 25 highs. Same thing as that 57.87 on the SPX. Very clean. Still calling this, a plausible bottom over here at that 402.39, 398 pre-market. We've got a 1, 2, 3, and here we are looking at a C wave. C equals A at 493.37. I mean, you can't line it up any better than that. You can't. Now, are we pushing into a bigger, more bullish? Again, very possible, but we're still looking here at around that 498, 502, 503 at best, if we do get any kind of a pump, which I don't know where you're going to get that pump from. But then again, I shared you the trend line on Apple. That paid out perfectly. Apple gets some good iPhone news with China, and you could see, Apple taking off back up into the 200 to 210 range. That could help over here on the QQQ to get to the 500s. We'll see it when we see it. But over here on the Dow Jones, again, not only showing you the March 25 highs, but showing that the Dow Jones still has not been able to fill the tariff gap from April 2, being one of the weak indexes because everything is inside the QQQ. And that was, again, one of those things that just get tired of repeating the same thing over and over again about everything being inside the QQQ. Over here on the IWM, the March 25 highs at 209.27. Expected the IWM to be a hell of a lot greater than it was, and it hasn't been. But there on Friday, we finally did get the April 2 gap filled, so that can be removed. I haven't drawn any of the downside gaps on here yet, only because I just haven't had the time. But you look here and you can see a clean 1-2 ABC right up here into the 100, 123.6 extension. Looks good, looks fine to keep this bullish, to make this a 3. Looking for a 4 and then get a 5 to the upside, because we were expecting that we were going to get a move back up here into 213, 208 on the IWM. It's just been taking a little bit longer than expected. So we're still not yet ready to declare this as dead in the water. 200 is resistance now, but IWM is just not being the strength that you want it to be. So having covered all that on the SPX, I will leave you with your VIX. Your VIX will come on that real quick, because here we are waiting and waiting and waiting and waiting and waiting to get that VIX 2102, and we're actually going to get it now that the Donald Trump stock market pump, buy stocks, China deal, we're finally going to get that 2102. We start getting down into this 18, 16 region, and now we got something to work with. But for now, and for a couple of weeks now, still waiting to see that 2102. So let that come to fruition, and we'll assess it once we get to that. Here we go. I will come back onto these in a little bit. Tesla. Showing you here on Tesla a simple daily chart for the year, having opened way up here at 390s, where the market opened. Tesla, beginning of the year. When we had our dip down here going into March, like I was saying, that 208, I got too much respect for 208. 208 is a rock solid support for me. Well, that 208 took a hell of a test. You were back here in the early part of March. You were back here in the beginning of April when we had the big market sell-off. But like I said, 313, 313, 313, and here you are on Tesla pushing up into 313. And I wouldn't hold my breath to think that 313 is going to be resistance, even though you had a fractionally decent dip there on Friday. 313, have some respect for it. Boeing. Now I can get into the email here. So on Boeing, and having gotten into this trade here on Boeing, as you can see here, I got into the May 30th 180 puts, and I got into the June 20th May 180 puts. Now, time is your friend when you're trading options. But like I said, I've been stalking 185.71 for 2 weeks. With more time, like I said, July or August, there's a good chance that you could see that 164.46. What I'm looking for is a break below 178. So I share for you here the Boeing, looking at it from a weekly point of view. And as you can see here on Boeing, which is up greater than 50% coming off of the April lows, lower lows, lower lows, lower lows, still keeping to the same high level right here at 187, 197. The weekly was starting to get a little bit overbought. Come over here onto your daily, and your daily, having been overbought since the latter part of April, again, this is what I trade. I'm trading the chart. I couldn't give a shit what the news is. I don't care how many employees they have, how many gorgeous stewardesses they are. I don't care if the pilots are drunk. I don't care. I'm trading the chart. That's what I'm trading, and that's the reason why I got into the trade. So the questions that are being asked, is it still good to get into? Listen, perfect entries are only going to happen inside of a prison shower. And if you don't believe me, go to prison. You'll find out how perfect the entries happen. So going back here all the way to March of 2024, so call it a year, you can see here this 197 being your area of failure. And every time that you have come into this excessively overbought region where your failures have occurred. That's all that I'm trading here on Boeing, is that. And now up here at 195, granted, oh my God, it's gotten higher. A move to the downside, even just down to that 185.71, like you saw in QQQ, McDonald's, Palantir, a number of puts that we've traded over the past couple of weeks and months. I don't need this to go to 180. I just need it to make a move towards 180. And depending on the aggressiveness of that move to 180 is where I'll be able to calculate whether or not I can make more money or there's a break-even part on this. But wider view, again, wider view over on Boeing, and I unfortunately have to keep you on this. Boeing has eliminated Donald Trump, 45. All of POTUS 45 is gone. This was your big pump over here in 2017, so let's just do it for shits and giggles, right? Manual, and the top being, let's call it 250. All right. That's it. The whole Donald Trump pump, boom, it's all gone. All of it came crashing down in 2021. All of it came crashing down in 2021. Where did it come crashing down to? The 2016 lows prior to Donald Trump being elected, way back here in February. You kept coming down to that same area, boom, 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 126, 126, 126. And that's where we came to. We came down to that 126 area. And as you can see here, just looking at it from a clean portion, you've got a sell divergence on the 1 hour, very simply put, coming off that 126, 128.88 being the lows. Here we are at 195. Oh my God, look at Boeing. Oh my God, look at Boeing. Well, your big gap coincidentally happens to be right down here at 165, 146. So a move down to the 400-day moving average at 182, that would be the first move. The 50-day, the 200-day, which came down and kissed each other, now we're trying to snake off on that big gap up, 164. Not going to rule it out, but I'm not going to be dedicated and focused on it. So I bring you back over here to finish you off with the SPX. I've got the SPX, I've got the NDX. And here it is, like I shared with you before. This area down here, 440 or 4400, 4150, 4100. This is not actionable. This is not actionable. Not yet. Bring you in here to where we are and how we got here, just so that you can see what your chart is. You see it? Okay. 5720. Now we're at OPEX week. We're getting a little bit of a gap up on this China fluff. We've got our March highs over here. Do you see it? Do you see it? Well, I'll bring you back again to where we were in September 2018. We posted our high there at 29.40. I was calling for 29.31 to be the high, 9 points higher. October we came up there, touched it again, October 3, and then we had our big sell-off into October. Our bounce into November, our dip, higher dip, Then we came back up here for our failure going into the very beginning of December. And it happened to be here, December 2018, right before the month started, Donald Trump came out and said, the China deal is official. We have made the deal with China. The China deal is on. And we sold off for 4 weeks in a row. And where we went down to was exactly minus 20%, exactly 20.02% down here into Christmas Eve and December 26th. And the reason I share it with you is because here, again, here's your NASDAQ. Coming off of your highs from back here in February 19th, the 5-year anniversary of the COVID high, February 19th. Your drop, your bounce, March 25, your drop down into April. Here we are, right at the March 25 area. Not saying that we can't go fractionally higher, but look at your chart. Look at where you are. That's all that I'm saying is look at where you are, look at what's going on. And come back out here again to that same period, back in September of 2018. You had your drop, you had your bounce. Didn't work out that well. Then you went down here into your bottom here into Christmas Eve, day after Christmas. So there's very little to be bullish about. And like I say, as far as it being bullish is looking that, oh yeah, we are definitely going up into the 6,000s. Hey, I haven't taken that off the table, and I've been talking about that for the better part of a month. But as of right now, and where we are and how we got here, we ain't looking so hot. So be careful with what you're looking at for the upside. And just be ready. Just be ready. If you are one of those guys who are going to be day trading, because after the full moon takes place, guess what?
So, supposing we hit the body with a tremendous, whether it's ultraviolet or just very powerful light, and I think you said that has him in check, but you're going to test it. And then I said, supposing you brought the light inside the body, which you can do either through the skin or in some other way. And I think you said you're going to test that too. Sounds interesting. Right, and then I see the disinfectant, where it knocks it out in a minute, 1 minute. And is there a way we can do something like that by injection inside or almost a cleaning? Because you see it gets on the lungs and it does a tremendous number on the lungs. So it'd be interesting to check that. So that you're going to have to use medical doctors with. But it sounds